UK investors are doing everything right. They're saving, they're investing, they're playing by the rules. And yet, they're falling behind. Not slowly, systematically. Meanwhile, across the Atlantic, US investors keep winning. Even when markets crash, even when recessions hit, even when debt explodes. This isn't luck, and it's definitely not intelligence. It's something much bigger. Today, I'll show you why UK investors are losing and why the US keeps winning, even when the global economy looks broken. Most UK investors believe the market is neutral. Same rules, same opportunities, same outcomes. That belief is expensive because markets aren't neutral, they're designed. And the design favors one country more than any other, the United States. From stock market structure, to currency dominance, to capital flow rules, the system quietly tilts in one direction, and most people never notice. Let's start with the most powerful weapon the US has, the US dollar. Over 85% of global transactions involve the dollar. Most commodities, oil, gas, food, are priced in dollars. Global debt? Mostly dollar-denominated. What does this mean? It means when the US prints money, the pain is exported worldwide. Inflation hits the UK harder. Currency pressure hits the pound harder. Purchasing power erodes faster. UK investors don't just fight market risk. They fight currency risk baked into the system. US investors? They live inside the printing press. Here's a harsh truth. When fear rises globally, money doesn't run away. It runs to America. Wars, pandemics, debt crises. Capital always floods into U.S. Treasury bonds, U.S. equities, U.S. real estate. Why? Because America isn't just a country. It's the financial safe house of the world. UK markets don't get panic inflows. They get panic outflows. Every global crisis quietly weakens UK assets, while strengthening US ones. Look at the numbers. The US stock market is over 60% of global market capitalization. The UK barely scratches 4%. But it's not just size, it's composition. US markets are built around technology, innovation, scalable global businesses. UK markets are heavily weighted toward banks, energy, old capital industries. One system compounds growth. The other preserves legacy. Guess which one wins long-term? The UK produces great ideas, but the US captures the value. Most UK startups raise early funding locally, then move to US markets, list on US exchanges, pay US shareholders. The innovation begins in Britain, but the wealth ends up in America. UK investors watch success stories from the sidelines, while US investors own the upside. In the US, government and markets move together. When markets fall, interest rates adjust, liquidity floods in, bailouts arrive fast. The message is clear. Markets matter. In the UK, the response is slower, tighter, more cautious. Austerity thinking still dominates. Growth takes a back seat to stability. Stability feels safe, but growth is what builds wealth. Here's something most people miss. U.S. pension funds aggressively invest in equities, private equity, venture capital, tech innovation. UK pensions? Heavily conservative, bond-heavy, risk-averse. That means U.S. workers unknowingly fuel market growth, while UK pensions protect capital but miss upside. Over decades, this gap becomes enormous. U.S. investors are trained to think in growth. UK investors are trained to think in preservation. America rewards risk. Britain rewards caution. But modern markets don't reward safety. They reward exposure. Exposure to innovation. Exposure to scale. Exposure to volatility. The US embraces it. The UK avoids it. And markets keep score. Not rigged. Structured. Designed around dollar dominance, capital gravity, market scale, risk tolerance, political support. UK investors aren't stupid. They're playing a game designed elsewhere. The smartest UK investors already know this. They think globally, not locally. Hedge currency exposure. Allocate heavily to US assets. Follow capital flows, not headlines. Invest where growth is structurally protected. They stop asking, is this market cheap? And start asking, where does money want to go? The U.S. doesn't win because it's perfect. It wins because the system bends in its favor. UK investors don't lose because they're wrong. They lose because they assume fairness in an unfair structure. Once you see the system, you stop fighting it, and you start positioning yourself on the winning side.